Test, test. Hey, all right, all right, all right. How you guys doing? About to start our weekly Q&A that we've been doing the last couple weeks here. So I just ran through my test on the sound. It seems to be going pretty well. So excited to do this. So let's go ahead and get started here. So it's self-storage. We're going to be talking about self-storage. This is a self-storage investing live stream. And self-storage has gotten hotter and hotter. Just recently it's getting hotter and hotter. A lot more people are talking about it. A lot more people are entering the asset class right now. And so 2023, I'm really kind of spending time answering questions about self-storage. So if you don't know me, my name is Powell. I'm a managing partner of Radiant Storage. And for us, we've acquired 16 properties in 2.5 years. That's 650,000 square feet, 5,000 units. If you want to know more about us, just send me a DM on Instagram or Facebook, and then we can reach out and talk. And if you'd rather just email us, at invest at radiantstorage.com. Okay, easy ways to get a hold of us. All right. We're going to take our questions today, so we're going to get into the questions. But before we do that, I'd love to have you like and subscribe, just so you stay up to date with all the material that we have. And also, probably most important, is post some questions. So for those of you who are watching, whether you're on LinkedIn or you're on Facebook or you're on, I guess, two different places in Facebook or YouTube, post some questions because I should be able to see them. There's a little thing at the bottom of the description. It says /group -comments. Let me see if I can show that. It's like this little text right here, group -comments. Just I think if you enter that, you should be able to I should be able to see your comments and who you are as well. Okay, awesome. So let's get ready to answer those burning questions. All right, let's get into it. Today's not going to be super long, but do got some good questions, and let's get started here. All right, let me turn that thing off. All right. Question number 1: length of lease. Okay, so I get this question a lot, especially people coming from residential, whether that's multifamily or single family houses. Is what's the length of lease on self-storage? And that length, the answer to that question is pretty simple. The answer to that question is it's month to month. All right. And you kind of think month to month, that's kind of weird. I mean, is that really kind of a safer investment when your lease is only a month and people can leave at any time? In general, you could kind of think of that. It'd be kind of counterintuitive when you think about residential, but with storage being month to month, what happens is, people put their stuff in storage. Typically, you put it in storage. You don't think you're going to keep it there for very long. You think you're going to keep it there for a month or two, maybe at the most, and then you think you're going to move out, right? But as you start to put more stuff in there, so you put a desk, and you put chairs, and you put an old TV, and you put a couch, and things like that. And then maybe you come back, you put a dresser in there. Really, to move that stuff out now, it's like, where am I going to put all that stuff? And it only cost me $100 a month. Maybe I'll just keep it there for another month, and I'll do it another time. I'll do it some other time in the future because it's a hassle to move all that stuff. Nobody wants to do it. So what happens is people end up staying for, on average, I think the national average is something like 14 months that they stay in self-storage, even though it's a month-to-month contract. So typically they're staying for over a year. Now, again, you don't have to. People can move out after 1 month or even less. But you would think that people would move out very fast just because it's a month-to-month lease, but it's just not what happens. It's just because it's a hassle to move, right? So nobody really wants to. So yeah, answer that question. Length of the leases, month to month. All right, very cool. Oh, hey Dave. I can see Dave here. How you doing, Dave? Great to see you. If you've got any questions, Dave, feel free to answer or feel free to ask them. I'm happy to get to the answers soon here. How about okay, this is a good question I get. Cost of investing in self-storage. What is the cost? In other words, what is the prices? How much could you, what are the prices of these self-storage facilities? Right. Let me just start with the high end that I'm seeing. The high end, for like a class A type, brand new, depending how large it is, right? I'm just kind of giving rough answers here. So it could be anywhere like 15 million, right? For a brand new one in a fairly popular or fairly large city, right? It doesn't have to be super large, but a decent sized city, brand new, class A, just like built within a year or so, probably somewhere like 15 million. On the low end, what can they be on the low end? I mean, I've seen them as low as like $200,000, even lower. I've seen them like $150,000, $100,000. So you could have the whole range if you're an investor of what you want to get, what you want to acquire. I myself am in that sort of $4 to $10 million range, right? Those are kind of the prices that I'm looking at. So a little lower than that, it's really just not suited for me. A little bit higher than that, it's probably not suited for me either. Those are just generally not the type of properties we're looking for. But you yourself have to choose what it is you're looking for. What's your team? Who's your team? Who's going to do the operations? Obviously, if you're in those, if you're buying a 20 unit self-storage facility and it's costing you $100,000, you probably cannot afford certain things like property management, right? It just doesn't give enough cash, but you can do that by yourself. There's only 20 units, so maybe you can just handle it by yourself. Maybe it's 50 units, and they're all full, and you only have a turnover here and there, so you're only answering 5 calls a month. I don't know. So maybe you can just do it by yourself, right? So depending on how you want to operate things, I don't want to take those calls myself, so I don't do that. And we have teams and we employ property management to do that for us. But that's just our strategy. Could be totally different for your strategy. But in terms of cost, somewhere $200,000 in terms of purchase price for a very small one, very probably small city, small town. Up to $15 million, say, maybe even more, maybe 18, $20 million or so. Okay. So that's it on cost of self-storage. All right. Let's get into, I got this question, roll up. Okay. It was kind of like a roll up question mark. Roll up. I think I addressed this on a call a few weeks ago. It's basically where a strategy, an exit strategy for people who are acquiring self-storage. So you can buy multiple facilities or build multiple facilities or whatever. You have a portfolio of self-storage facilities. Basically, you're rolling them all up into one large portfolio and then potentially selling off the whole thing as one business. Okay. So that's what a roll-up strategy is. And that's something that, we ourselves are actually looking to do as well. And so, just kind of putting together a whole portfolio. If it's something that we can find the right buyer for, then maybe we sell the whole portfolio as one versus selling off individual properties. Okay. So also the reason why you do this is because there are some fairly large buyers in the industry, and they're buying at higher multiples. So say if your multiple, whether it's a revenue multiple or like NOI multiple, or in the business world, it's more of a, like EBITDA, or there's different sort of, metrics to use. But whatever multiple you're using, and you're going to basically sell off an individual property, you have sort of a range of where you can sell it at. So generally it's like in real estate, we use cap rates. It's going to be somewhat on a certain cap rate, right, at an individual property. But if you're selling 20, 30, 35 properties at the same time, it's not going to be sold at that same cap rate. It's going to be sold at a lower cap rate. Well, okay, you probably wouldn't sell it at the same cap rate. You sell it for a lower cap rate because a buyer at that level is going to come in and want to buy your whole portfolio, and they're willing to pay more to buy it, all of it at one time, versus they got to go and buy individual, properties, and just kind of like taking a lot of time to do that. They'd rather just buy the big thing and just pay for more money because you brought it all together as one big portfolio. Okay, so that's why you would do it. All right. Let's see. We got some questions here on insurance. Let's get into the insurance questions. These are generally good questions. All right. The questions were, I guess, on what the insurance was. How do you find insurance? And I guess a little bit of description of like different types of insurance, and we'll get into the different types here. But in general, there are pretty specific carriers when it comes to property insurance. So these are carriers that either specialize or have done a lot of self-storage insurance. So you want to find these particular carriers who they may not just be your like local, your local guy that does your auto insurance, or your local guy that does your property or your house insurance and things like that. It's more like these ones more specialized specifically in self-storage property insurance for you. Okay, so, and where can you find them? So in the self-storage industry, you have it's fairly common to have like these associations. So like the state associations or even the national associations, where these vendors, so these carriers for like insurance or lenders or builders, all kinds of architects, all kinds of different people, will list their services inside of those associations. So that's a great place to find them, is that they'll often be listed there. Okay, so it's not like you need to go out and call a bunch of different companies. You can just find the self-storage associations or even the self-storage websites that list these, that have these directories, and you can find like a few of the companies that specialize in self-storage insurance. All right, so trade magazines, expos. There's several expos that happen that are national throughout the year. Each state has their own expos that probably happen either monthly or quarterly, annually. So you can go to any of those, and they can really kind of point you out in the right direction. All right, it's a little different than, I would say, multifamily. Multifamily, I'm sure there's like large associations and everything, but as an investor, that's really not a resource that we go through that much, is going through like associations. It's not bad. It's just hasn't been one of those things that's like it's necessary to go to the associations. They can help you with like referrals with maybe lawyers and things, documents. But in storage, it's very, very common to go to the associations. And that's primarily where you're going to find a lot of your resources that are going to help you. So if you want to build a place, you want to buy a place, you want to finance it, you want to get, anything, you want to talk with architects, go to your associations. Okay. And you can look them up, just put in self-storage association and put your state. And if you want to look, there's a couple of national ones as well. You can look up the national ones as well. All right. Other way, obviously ask for referrals. So that's another great thing. Now the other part of insurance is there's property insurance. Just like with all real estate, there's property insurance. But in self-storage, another, I guess, side of the insurance sort of equation is tenant insurance. Okay, so the tenants are getting insurance on their items inside of your property. So this is like I wouldn't say it's not always mandatory. Sometimes it's mandatory, sometimes it's not. Depends on each facility. At our facilities, it is. So all of our tenants have tenant insurance as well. They either have our insurance or they have their own renter's insurance, which covers their belongings that are in storage. Either way is okay with us, as long as they have some type of insurance that's protecting their items. Now, if you're looking for these companies that offer tenant insurance is different than property insurance. Okay. And it may not be the same carrier. So it may be somebody else that's offering tenant insurance. Tenant insurance can be a way to generate profit or revenue generator, right? It can increase your revenue because you basically partner with these insurance companies, and part of the monthly premium for these insurance policies will go to you as the owner. Part of it will go to the carrier. Okay. Sorry, I got to get a drink here. Okay. So it's a revenue generator for you, as tenant insurance is a revenue generator. But it requires kind of a highly specialized company. So you do want to find those highly specialized companies that specifically give tenant insurance. Now, tenant insurance is going to protect the tenants from items like water damage, fire damage, probably like smoke damage, rodents, theft, things like that. Okay, so damage to their items, they're going to file a claim with their tenants insurance. And when it comes to the revenue split, and it could be kind of all over the place. So the larger you are as an owner, like if you have one facility and you have and you're the operator and you have 100 units, which is small, you're probably not going to get that great of a split compared to somebody that has 10,000 units and they have 30 different facilities all over the United States. They're going to negotiate and get a better split from that tenant insurance company. Okay, but I'll just give you a rough idea. It can be anywhere from like 30% to say 70%. All right, roughly. Okay. All right. Let's get into a question. Hey, I got this question. I just saw this question from Gene today. Gene, thanks for submitting this question here. It was, what's the minimum acreage to build? Okay, so let me give a little disclaimer to this, is that I've never built a self-storage facility. Okay, so all of my self-storage facilities have been ground up facilities. Have not been ground up, have been existing facilities. Okay, so I've never built anything. What am I saying? I'm just all over the place here. I've never built any of those self-storage facilities. I've only bought existing properties. Okay, so I am not the expert when it comes to minimum acreage to build. However, I would say that if it's for me, I'm probably going to say it's probably around 4 acres is what my minimum acreage be to build. Okay, now that's because I look at one of my properties. It's on 2 acres. We got about 20,000 square feet that we are 20,000 rentable square feet out of that 2 acres. So I just kind of double that and say, truthfully, I probably wouldn't look at a lot if it wasn't smaller or it wasn't any larger than, 4 acres where I could build at least 40,000 square feet. Okay. So for me, if I was going to build, I'd probably want to build minimum 40,000 square feet of rentable square feet. Obviously, acreage is a lot larger. Just the square footage of an acre is a lot larger than that. And I'm talking about single story as well, because we do have a property that's it's 5 stories and it's on a half acre, right, of a lot. So if you're going up, well, you don't need that much acreage, right? So just in our case, if I'm thinking that you're going to build, I'm just talking about if you're building a single story. Me personally, I'm not going to look for something that's under 4 acres. Okay. You're also going to have to worry about things like drainage. You can't have your buildings, all the way to the property line in some cases, right? So a lot of your acreage is going to get kind of, depleted. You're not going to be able to utilize all of it. Okay, when you're building. All right. Got some more fun questions here. Let's get into this one. Okay. Hey, auctions, vehicles and auctions. All right. This is a fun one here. All right. So sometimes when you are auctioning off somebody's, your tenant's items, right? You're basically, they've been late. They've been late for about 2 months. You went through the auction process and now you're going to sell off these items. Okay. Sometimes there's a vehicle in there. Right. And you're thinking, wow, there's like a car in there. And we've had multiple times that there's a car inside of that storage unit. And so you think, wow, I mean, this is going to sell for a lot. What if I'd been on it? How much is this car worth? Oh, okay. So first of all, caveat, do not buy your own self-storage. Don't buy your own units or bid on your own units at your own self-storage facility. Don't do that. Second thing is that the vehicles go through a different process. So it's actually kind of a hassle. It's the person who's bidding on the units. In our case, now this is how we do it. This doesn't mean how everybody does it. In our case, we have to go through a different type of lien auction with that vehicle. We basically, instead of doing that, because it's kind of a hassle, we would just rather tow that vehicle, have a tow truck company come tow that vehicle. The tow truck company takes care of all that lien process for the vehicle. They do all the notifications and go through all that. And then the vehicle gets basically auctioned through the tow company, not through us. Okay. So it's like a separate lien. So all the items there will be sold except for the vehicle. Now, I've seen some pretty nice vehicles inside these. I mean, like I was giving an example of there was one that was a pretty decent vehicle. I mean, we sold it probably 2 years ago, and it was like probably like an 88. No, what am I saying? Probably like a 94 Mazda Miata, and it was like clean, nice looking, clean, and everything. And I just saw pictures of it, but it was yellow, so it was like it got a custom paint job on it. So I think I sold. So, but it looked nice, and it was certainly going to sell for more than the $300 or whatever that actual auction of the other items sold for. But yeah, we had to basically tow that vehicle away. Tow truck company takes care of that. We don't really make any money on that. We just get rid of that thing, and then auction off the rest of the items. Okay. Hey, I got a question from Charles Clarkson. Charles, thanks for joining. It's similar, so I'll kind of answer this question too. Is the eviction process easier than multifamily residents? Okay, that's a great question. I do get this question a lot. So, in residential, there is let me give you the short answer. The short answer is yes. Okay, it's a lot easier. All right, so the eviction process is with residential. So whether that's single family or multifamily, you're going through an eviction process. And that eviction process can be, depending on what state you're in, can be very lengthy, or it can be, like 60 days. It's kind of on the short end, right, of a full eviction. In the storage world, you're going through an auction, right? You're going through a lien. You're putting a lien on the people's items, and then you go through an auction to actually sell the auction. So the process is a lot more, it's a lot easier. It's a lot more streamlined. Similar, you have to do things like, it'll take you about 2 months, again, anywhere from 45 days to say 60 days to go through the whole process. But when it comes to an auction, any of the proceeds, so say these items inside of the auction, inside of your, the unit, say it's a dresser and a desk and bikes and stuff like that. Well, say it sells for $200. So somebody bids on $200. I'll pay for $200. Well, that $200 first comes to pay us back for our expenses. So we get back rent. We get late fees. We get whatever late charges. We get cleaning fees. I don't know, whatever fees that we have. It all goes to pay that first. So say our fees are $180. So there's a remaining of $20, right? So now there's $20 left. Where does that $20 go? That $20 now goes back to that the previous tenant. So they get $20 out of that. So we get the $180 first. They get the $20. Okay. So in an eviction, I mean, what are the chances that you're going to actually be able to recover any money after 2 months of somebody living in your unit where they're not paying any rent? Obviously, it's probably even longer because there's a certain reason you're evicting them. They probably haven't paid for, at least a month before that. So you have you're missing maybe up to 3 months, maybe even longer. Depends on where you are. If you're in California, it's a lot longer. But you're saying minimum 2 months, 2 months of them not paying rent, living in your unit. Probably by the end, they probably have trashed your place, right? So they're not handing it over to you with a bow tie on it. It's looking pretty messed up, right? Now, what are the chances that you're going to actually recover any money? Are you going to get $500 from them or at the end? No, you're not going to get anything. Even if you try to garnish their wages and go through judgments and stuff like that, I mean, you're not going to. I mean, you can't really count on that stuff happening. So you're basically just out. any of that money. Yes, you get your your property back, your unit back, but you got to go fix it up to get it rented out. Storage is a lot easier at that point. Say you have an auction, somebody comes and picks up all that stuff. They got to do it within 3 days. They do it within 3 days. They got all that stuff out of there. And then you, as the owner, what do? You just basically go in there and you sweep it out. You put a rat pack in there. You put a new lock on the door. You shut it, and it's ready to be rented. Right. So it's just a much easier process, right, than an auction. Charles, if you got a chance, watch my last one. I think it was my last video, or maybe the one before. I talk about the difference between auctions and evictions in a lot more detail. But just kind of going through the whole scenario of what happens during a full eviction versus a full auction and the differences. And you'll see that it's just much easier when it comes to the lien process, right? The last thing I just like to point this out to you. I've probably said this a bunch of times, but what I tell people is like, look, when it comes to tenant and landlord laws in the United States, there's kind of like some states are very tenant friendly, some states are very landlord friendly, and there's a debate on who's right. It depends on where you live, right? Who's right, who's wrong? Well, there's not really much of a debate when it comes to the process with self-storage. So what happens is a renter is taking their stuff and they're putting it on your property, and they have to pay for it, or you as the owner get rid of it, right? You say, okay, yeah, you can put it on my property, but you either pay for it, and if you don't pay for it, then I'm going to get rid of it. Pretty much everybody in America feels like, yeah, that sounds like the way things should happen. If you have personal property and you put it on somebody else's property, well, they're either going to get rid of it or they're going to make you pay for it. I have no problem with that. And so everybody kind of feels that way. And so the laws are kind of written that way. And so, whereas in evictions, they're not really written that way across the United States. Okay. Awesome. But great question. Thanks for asking. And yeah, I appreciate the comments here. Thank you. Okay. So let's see. Got another question. Let me see. I got a question from Dave here. Okay, Dave. Appreciate it. Oh, well, it's tough to read there. It's so small. Let me see. All right. Do self-storage investors look for the same MSA data points as multifamily investors, such as job growth, job diversity, population, landlord-friendly, median household income, crime, et cetera, et cetera? Okay, so in terms of like you're talking about sort of the underwriting process, and do self-storage investors look at the same stuff as multifamily? I would say that, okay, in a general sense, yes. However, in a much more sort of micro sense of like self-storage is much more micro based asset than multifamily. So multifamily, you're really looking at the large MSA. You're looking at, the things that you mentioned here: job growth, job diversity. You're looking at the large. How is the whole city doing? Because you're going to be attracting people from all over the city, right? Whereas self-storage isn't as concerned with all of those things. Yes, they're important, but it's not as concerned with all of that. It's more concerned with what's the economy like? What are the people like in your 3 to 5 mile radius? Okay, so I'm really only specifically looking at that because the self-storage facility that is 20 miles away, but it's still in the same city, it really has nothing to do with your facility. Right. And so, and that 20 miles away, that area has nothing to do with your facility. The vast majority of people that are going to be renting from your facility are going to come from a 3 to 5 mile radius. Unless you're in a very small town, they may come 20 miles or 10 miles away. Okay. If you're a very small town, but I'm talking towns that are over, 50,000, 100,000 people in the MSA. They're only going to come from 3 to 5 mile radius. So what happens on the other side of town doesn't really matter all that much. Okay. So that's a big difference in self-storage versus multifamily. With multifamily, when it comes to like competition levels, a lot of times you're looking like if somebody is going to build a brand new Class A property across the street from yours, you're probably pretty happy with that. You're like, okay, sure, do that. Build, because it's not really going to affect my my renters, because you're a Class A and whatever, I'm a Class C property, and it's probably just going to you're going to charge more, so I can probably increase my rent. And some of your people who think that your facility is too expensive are probably going to come to mine in the multifamily world. Well, in the self-storage world, it's not like that. You really got to know what's like in the 3 to 5 mile radius of your facility. A facility that's 10 miles away doesn't really matter. It's not really that important to what you are. So you're like an MSA, you could take anyone. You could take Dallas, Houston, Kansas City, whatever, Chattanooga, Tennessee. You could take any of these ones, and you could kind of debate whether or not it's a good MSA for multifamily. There'll be kind of a general sense of like, yeah, it's great one, or not so great. But in storage, it's like, well, it really depends on where you're talking about in that city. So on the southeast corner, it could be great. But if you go to the north, it's not very good. There's too much competition. And the 3 to 5 mile radius is not good. Okay. So that's a big difference, is that you really need to look at the micro market with self-storage as an investor, compared to like really you're looking at the macro sense in multifamily. Because as a multifamily property, you could attract, if you're in the right school district, you could attract people to come to your facility, to come to your apartment building that are maybe from across town, right? They're like, hey, I want to come to a better school district. Or maybe it's the opposite way. You're in a worse school district, and they're like, okay, well, when my kids start to get to high school, I'm moving out, right? I'm moving out. I don't want them to go to the high school here. So it's going to be important. And people will move 10, 20 miles away to go to a nicer school district, nicer location. But in storage, that's not happening. They're not going to go to your facility and then go, oh, well, I'm going to go 20 miles away to another facility. Or I like your facility so much that I'm going to drive 20 miles away to come to your facility for the next couple of years. It's not going to happen. Okay. All right. Great question though, Dave. Thank you for asking that question there. Okay. So let's see. Frank. All right, Franklin, how you doing, buddy? Let's see. Hi, Powell. Let me see. Sorry, I can't read this for you. What things can you perform to create forced property appreciation? Okay, so what can you do to force the appreciation on a self-storage facility? So I will tell you this. I'm looking for 4 areas of value add in my self-storage facilities. Okay. Now this is, again, I'm just answering for me. I'm not answering for everybody else who is investing in self-storage. There's a lot of other people that do a lot of other things. I'm just answering for me. Okay. But I'm looking for 4 different areas. I'm looking for low rent. So low rent compared to the market. So you will be able to find some of these facilities that their rent is very low compared to the rest of the market. They just haven't kept up because they don't want to raise rates. They don't want to have people leave. They're scared that if they raise the rates, then people will leave. Right. So they just keep them at the same rate. And then as the years go by, the rates have gone up and up and up, and they've just kept them at a certain level. Right. So you'll find these, and we've found these, and we've on several of our facilities. So low rates, low occupancy. So sometimes we've bought facilities that were 60% occupied, all right, 65% occupied. And there's no reason that when we look at the general demographics that they should be like that. So we quickly just say, hey, that's where our value add is going to be in this facility, is bringing up the occupancy, not increasing the rental rates. We're going to keep them about the same, but it's really the occupancy that's low. Now, it could be both. That's even better for you. Third way is operational inefficiencies, which basically means in some ways you're able to cut fat off of this. Like they're running it the way that they're running it. You think you can do a better job of it. The expenses are too high in some way. Their admin fees are too high, or their payroll costs are too high, or their insurance costs are a little high. Whatever it is that you feel like you can cut something and reduce the amount of expenses that you have. You can do that. Now for us, we're always doing it with, we run our facilities remotely. So that means that we don't really have payroll costs. So a lot of times payroll costs are, we don't incur those costs. So we're able to chop off a lot of the expenses that way. That also will include like utilities. If we don't have any payroll costs, we don't really need utilities as much, right? So the utilities will drop. Now we don't have anybody in the office, so our admin costs go down. as well. So we can bring down our costs significantly throughout several of these different ways. Okay. Number fourth way of value add that we're looking for is expansion. Okay. So is there an ability to expand? Is there extra land available? Is there a section of the property that is not quite, you can't quite build on there, but maybe you could put portable units on there, or we can convert some of these big units into smaller units, or, whatever it is. Can we organize the parking a lot more instead of it just being random cars all over the place? Can we organize the parking? There is a lot of this opportunity out there. Okay, so these are the 4 different areas that we're looking for. Again, let me talk to you. 4 different ways that we're looking to for value add: low rental rates. Second one is low occupancy. Third one is operational inefficiencies, and the fourth one is expansion possibilities. Okay, awesome. All right, thank you, Franklin. Thank you for that question. Let me see. Okay. Okay, let me see. I think I got about 2 more questions before I end this here. Okay, and then I got to go. So let me go with Seth here. Seth, thank you for joining. Appreciate the question here. You're evaluating I think you say you're evaluating a property that says underserved market, but there are no metrics listed to support this claim. What are the most important factors in determining the underserved market? Okay, so sort of the easy beginner's way to do this is to look at square feet per capita. Okay, what is the square footage per capita? Meaning how many square feet of available storage is there in a 3 to 5 mile radius? Okay, that's what you're looking for. It's called square foot per capita. That's a metric that you're looking for. The lower, the better, right? So if it's like 4 or 5 square feet per capita, well, that's good. That means there's 4 or 5 square feet per person in that area. If it's like 20 or 30, that's high. That means there's a lot of availability. Means there's a lot of competition in that place. Okay, so that's a metric to use. I would tell you that also realistically, that's just a metric. It's not the same for everywhere. It doesn't mean that it's going to be that your place, just because it has a lower square foot per capita, that's going to be more successful. I have had cases where it is the opposite. Okay, in the same geographic area, 10 miles apart, one was a square foot per capita was a lot higher, the other one was a lot lower. We would have thought everything kind of pointed in the direction that the one with a lower square foot per capita would have been a more successful property. It has not turned out that way. It has been the other way around. So that's just a metric to just, give you some guidance, but not to say that that's the end all be all. You really still got to look at the occupancy levels at the, with your competitors in that 3 to 5 mile radius. And you got to look at the rental rates. Those 2 metrics are more important. So what are the rental rates in that area? And what are the occupancy levels for your competitors? Okay, that's more important than square foot per capita. But I would say the sort of beginner's way to do it is look at square foot per capita. Okay. All right. Thank you for those questions. Thank you for that. If you got any more, please submit them. I got one more question for today. I'm just going to answer it really quickly. It is on website. I think this is a good question. I haven't had this come up. Sorry, for some reason I can't get this to show here. It is on the website. So a lot of people are asking, like, how do we, the website that you have for your self-storage facility is extremely important. It's more important than it is in multifamily. Multifamily, you got, you have a website and it's whatever. It's not really probably functional. It's just kind of informational, but you don't really use it that much. In self-storage, you use it a lot. It's really important that you have a website and a functional website. We've ran into a lot of places that do not have a functional website, and that's just a value add that we think we can bring to our facility. But when you are creating a brand new website for your self-storage facility, it costs us about $3,500 to get that very first one. Okay, so you got to outlay, you got to think about $3,500, somewhere around that $3,000 to $5,000 range that you're going to pay somebody to, get you a website. Now we did a custom one, so they built a custom one. There's templates out there that's going to be like $2,000. I mean, you do what you want, and you can choose to, go whatever way you want to. I just personally think the templates are a little, they look like a template. So it's just not what I wanted. So it also took about 6 weeks to get it done. So if you're getting it done, so if you're closing, and you're thinking you're closing like next week or 2 weeks from now, and you haven't started your website's not going to be ready, and especially if you do a custom one, it's not going to be ready in 2 weeks. And so you're going to buy this property, and all of a sudden, all these people who could rent from you or trying to contact you because you're the new owner, you don't have your website ready. You're going to be they're going to be like upset. You're going to upset a lot of people. Okay. So think of it as in like, hey, this could probably be a 6-week process to get your website done. All right. Ongoing, you're going to need to do SEO, like search engine optimization. That's what SEO means. It basically means that you got to show up in Google and other, other search engines. The higher you show up, the better the better ranking you have, and you need to probably pay somebody, like unless you're good at it. You probably need to pay somebody to do this SEO, and it's kind of one of these things that you don't really see the benefits of SEO for a few months. It might take 6 months before you really see the benefits of the SEO. So, and it's going to cost you an ongoing fee every month to do that SEO. So there are some expenses, when you're talking about a really functional, nice website versus, something that's like a template or something that's not very functional. Okay. You also want it to make sure it integrates with your management software, right? So if it's got to integrate with your management software. So you have management software that's, we can talk about that another time, but that's another cost that you have as a owner here. And you want to make sure your website is talking to your management software so that you make changes on your management software. It shows on your website. All right. So that it's not two different things. Your people are signing up for your website, signing up to rent something, and then it's not what they see, or it's not what your management software sees. Okay. So that's a little bit about the website. I did have questions about, creating a website and, some of the details about it. But yeah. Okay. So that's it for tonight. For those of you who are interested in investing with me or my team, with Radiant Storage, we do have an exciting opportunity right now in the world of self-storage investing. If you're ready to jump aboard and you want to see an actual deal and get involved, reach out to me. It's a 506C, so it's for accredited investors only. But if you leave a comment below, or actually it's probably just easier to send me a direct message on, Instagram or Facebook, LinkedIn, or whatever it is, send me a direct message, or just write to our email, invest@radiantstorage.com, invest@radiantstorage.com. And then we'll get in touch with you and we'll be able to show you what our deal is like. Okay. So that's it for tonight. I appreciate you guys all showing up, spending some time with me. Love to have you give me a thumbs up, and submit more questions. Love to answer more questions for you guys. Okay. Take care, everybody. I will talk to you all soon. Thank you.